Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Marriott International, one of the world's largest hospitality companies with a broad portfolio of hotels and lodging brands. Marriott is known for its extensive range of accommodations, from luxury to economy, and its commitment to customer service. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Marriott has been a leader in the hospitality industry for decades. From a behavioral finance perspective, how do biases like the status quo bias and loss aversion influence their decision-making, especially in areas like customer service and brand management?
The status quo bias is particularly relevant to Marriott's approach, especially in how they manage their brand portfolio and customer service standards. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. Marriott leverages this bias by maintaining consistent brand standards across its hotel portfolio, ensuring that guests receive a familiar and reliable experience regardless of the location. This focus on consistency helps Marriott build and maintain customer loyalty as guests come to expect a certain level of quality and service when staying at any Marriott property. Loss aversion also plays a significant role, particularly in how Marriott approaches risk management and strategic initiatives. Loss aversion refers to the tendency for people to prefer avoiding losses rather than acquiring equivalent gains. In the context of Marriott, this bias can drive the company to adopt conservative strategies in brand expansion and market entry, focusing on markets and segments where they have a proven track record. While this approach helps protect their market position and minimizes risks, it may also limit the company's ability to aggressively pursue new opportunities or innovate in emerging markets.
On leveraging the status quo bias and loss aversion has helped Marriott maintain its leadership position in the hospitality industry, appealing to both guests and investors who value consistency and reliability.
Exactly. Marriott's strategic use of the status quo bias in maintaining brand consistency and loss aversion in risk management appeals to investors looking for a company that balances operational excellence with cautious growth strategies. However, this approach also means that Marriott must carefully manage the risks associated with market shifts, technological advancements, and evolving customer preferences, particularly as the hospitality landscape continues to change with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at Marriott International. As a major player in the hospitality industry, DEI is particularly important for Marriott. How does this intersect with behavioral finance?
Marriott's approach to DEI is crucial, especially as the company operates in a global and highly customer-focused industry where inclusivity can drive better decision-making, customer satisfaction, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Marriott's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Marriott to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the hospitality industry. For investors, Marriott's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Marriott build stronger relationships with guests, employees, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like hospitality, where the ability to foster inclusivity and customer trust is critical to long-term success.
That's right. By embedding DEI into their corporate culture and guest services strategies, Marriott not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Marriott operates in a highly competitive and rapidly evolving industry. How does the company adapt to changing travel trends and consumer preferences, and what role does behavioral finance play in this?
Marriott's strategy involves continuously adapting its brand offerings, service models, and technology platforms to meet the evolving needs of travelers while maintaining its focus on customer satisfaction and brand consistency. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, technological advancements, and shifting consumer behaviors. Marriott's ability to understand and respond to new travel trends such as the increasing demand for sustainable travel, the rise of digital booking platforms, and the shift towards experiential stays allows it to stay relevant and competitive. By using data analytics, customer feedback, and market research, Marriott can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the hospitality market.
And this adaptability is essential for Marriott, especially as they face competition from other hospitality companies and the growing demand for more personalized and technology-driven travel experiences. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Marriott's focus on understanding travel market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the hospitality industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in consumer preferences, technological advancements, and competitive pressures.
Now, let's compare Marriott to other companies in the hospitality and lodging sectors like Hilton, Hyatt, and Airbnb. How do the behavioral finance dynamics differ?
Marriott's dynamics are often compared to other hospitality giants like Hilton, Hyatt, and Airbnb, particularly in their approach to brand management, customer service, and competition. Marriott's strength lies in its focus on a broad range of hotel brands and consistent service standards, appealing to investors looking for a company that balances operational excellence with strategic growth. Hilton, with its emphasis on loyalty programs and global expansion, appeals to investors interested in a company that prioritizes customer loyalty and market leadership. Hyatt, known for its focus on luxury and wellness experiences, attracts those looking for a company that is driving advancements in high-end hospitality services. Airbnb, with its focus on home sharing and experiential travel, appeals to investors interested in companies that integrate technology with alternative lodging options. Marriott's behavioral finance dynamics are shaped by its reputation for brand consistency, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the hospitality industry.
And unlike Airbnb, which focuses heavily on home sharing and experiential travel, Marriott's strength lies in its specialization in hotel and lodging services, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Marriott, the focus on brand consistency, customer satisfaction, and market adaptability provides a unique value proposition in the hospitality industry.
To sum up, Marriott International's approach to business is deeply influenced by behavioral finance principles, whether it's through their brand management strategies, adaptation to changing travel trends, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Marriott's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.